drop it. Under drop. Or too early. Hey, okay, well, that's DJ Kun for now. What's up, everyone? How are you doing? Sunday, 1 hour removed before the final race of Formula One. And we're gonna live here. Gonna go live on YouTube. Check the prize section. And also share some thoughts, because in this live stream, we're going to talk about some rules regarding diagonals, because there are a couple of changes in the diagonal rules that I got to know the past week. And yeah, I will shortly go over what that means for diagonals, because they become a bit more flexible in a way, like a little less strict. For typical pattern traders, that might be a bit more difficult, but yeah, I'm going to explain to you the new rules of diagonals in the live stream as well, in comparison to the old rules of diagonals. And we're going to go over Bitcoin, and then probably we're going to, you know, of course, chatting, we cannot forget chatting. And then at 2 p.m. Formula One starts, so I'm going to, you know, close the stream and watch the final race, see what happens. Ferrari against Mercedes, right? Aston Martin against McLaren. It should be quite interesting indeed. So that being said, let's get started. Just making sure I have something set over here. Very, very nice. So, okay. Who do you follow? I mean, of course, the first time Max Verstappen had the opportunity to win the championship, I'm obviously for Max Verstappen. But also, look, I'm Dutch, he's Dutch. But what I look for in any sport is underdogs or new people winning. That's what I enjoy the most. And in 2021, when we had finally a challenger for Lewis Hamilton, who won like so many championships in a row, except for Rosberg in 2016, I was like, you know, fuck Hamilton. Verstappen needs to win. You know what I mean? That year, it was about Verstappen winning just because he's the challenger, right? Hamilton won like 7 already. Rosberg was the teammate, won 1, okay. But, you know, like, I want to change. So that year, I wanted Verstappen to win. Then in 2022, Leclerc started very nicely, which I loved, right? Charles Leclerc in Ferrari had a good start of the season. Ferrari messed up with all the strategy and all the shit, and therefore we got the meme with the clowns on the pit wall. And then Max won his second, and this year no one challenged Max. But now it gets like, look, I don't care Max winning. You know, he got his stuff in 2021. I like good races, close seasons, and surprises, underdogs winning. So basically, you know, this season it would have been nice if someone else was able to challenge Max, because of course, you know, it was a bit boring. The beginning with Checo was interesting, but yeah, he's so good. And it's very impressive. I mean, he broke all the records and he's doing amazing, and it should be respected. From a, you know, viewer's perspective, I watched for so many years already, right? But I like close battles, and that's why I also like this season in qualifying and fighting for P2, P3, P4, P5. That's and the midfield. That's interesting. But I hope someone else wins the championship next year. So I didn't hear what Duan said, but congratulations to Theo Porcher. Vesti, sure, that last lap accident. Okay, before we go chatting later, guys, I got stuff to do. I got stuff to do here. You know, got to explain things. Vesti was lucky to even finish the race at the end there, because Maloney was like, "Yeah, you're not coming through," and then he loses the car, and Vesti flies, and oh well, he did his best. But that was a nice. I don't follow Formula 2, but when it's the final race of the year and there's a championship on the line, who cannot not follow Formula 2? Okay. Anyway, Duan said Max's car is nothing special. I know, but Max is very good from the start, right? He's proven to be an excellent, amazing driver. He's breaking records for a reason. Look at Perez, you know? So Max is doing amazing. But what I like from a viewer's perspective is I like to have close battles and underdogs winning and that sort of stuff, right? Like Max the only thing he knows is racing. But let's talk about Formula One in a second. What's up, everyone? How you doing? Adrian, greetings. DCC, what's up? Nadiri, good afternoon as well. Caught him early, exactly. Nick K, Laurie, thanks for all your comments as well, Laurie. I appreciate it. LJ is here once again. How you doing? We spoke about Formula One next year. Yeah, next year. Let's see if McLaren, right? McLaren with Norris and Piastri. Maybe McLaren can do nice things next year. But yeah, Max, he's an amazing driver. Like incredible. Like since he started in Formula One, he was bound to be a champion. 2021 was amazing. I really I wanted Max to win that year. He was so good. And Lewis won enough. You know, I want to change. But now Max has won enough. You know what I mean? Now we can have a close battle and hopefully maybe Lando wins or Charles Leclerc wins or, you know, that sort of stuff, right? But this year has been very good for the midfield. Amazing, right? But not for the P1. Okay, what we're going to do. This is what we're going to do. 1, we're going to talk about Elliott Waves on Bitcoin. 2, we're going to talk about the change in rules for diagonals by Elliott Wave International. And 3, we go chatting till the end. Now, I don't have too much to say regarding the update in like Bitcoin, the chart, as we're basically at the same price as, you know, yesterday and yeah, you know, like, but still what we see locally, I do have some different thoughts because I have a idea for the micro, or no, not that one, the medium time frame bullish and bearish scenario, especially the bearish one. I have a preferred scenario for a wave Y. So what we're looking for, and I want to focus on this range and then zoom in over to the local price section. But this is the bearish scenario where wave 4 simply continues, right? Simply like complex structure, WXY, sideways corrective structure, typical wave 4 price section. And then we're looking for a wave 5. Now here, right, one can label this as a WXY or an ABC. However, following Elliott Wave rules as well, and Adrian, it's Robert Prechter. So Elliott Wave International keeps statistics, and you know, they sometimes change the rules when new books or things come out. So it's always good to follow. But they are the IP holders of Elliott Waves, right? That is Elliott Waves, basically. That's where it comes from. So, and based on their data and everything, they tweak certain rules, make it guidelines, or guidelines go to rules. So in this scenario, right, this is the more bearish and then bullish scenario, right? As we still expect to move to the upside in this scenario. We're looking for a move down. Now, WXY, or someone can label this potentially an ABC. The problem is, also based on the Elliott Wave rules of Elliott Wave International, that if you would label this a flat in a wave A, wave B, and then an impulse wave C to the downside, then wave B internally is a flat in an A, B, C. Regular flat, wave B reaching the 0.9, target for a regular flat, and also then wave C ending in the most common target area for wave C in an A, B, C, target area respected. And a flat wave B in an A, B, and then an impulse C is for them officially not allowed. But if you then go to the statistics, and by the way, everyone, you should check this out here. In Discord, go to the bottom, go to Elliott Waves, check these documents, right? So here you can find statistics from someone that is very well known in Elliott Waves as well. And based on statistics, it is possible to have a flat inner flat, so a wave B flat. Maybe I have to remove this scenario for a second. So an ABC, to make things clear, not only. So if we talk about an ABC, it is possible to have a wave B flat in a bigger flat, but it's incredibly low probabilities that if you get a flat in a B, that it is a flat. So that is why the preferred scenario is a WXY instead, right? Because you then are looking for a flat here in a 3-wave zigzag, zigzag, and then a 5-wave structure up, finishing X. And then we look for Y in either a zigzag, a flat, or a triangle. And I got thoughts about which one of these three has currently, for me, the highest probability. While I get a message. Okay, quickly messaging a friend here. So yeah, WXY. Now, when we look at this scenario, we're looking for, and this is of course, you know, it's flat after flat after flat, but that's allowed. So in a WXY double combo, you can't have the same structure in W and Y if it's a zigzag. You're not allowed to have a zigzag in W and a zigzag in Y, but you can have a flat and a flat. So here we're looking running flat in W, flat in X, and then another whatever it is in wave Y, right? One of these three. Should actually remove the wave C impulse here as well while we're at it. Now, based on the price action we have locally, right, over here, there are, like, probabilities are changing for what could potentially appear in a wave Y. Now, for a zigzag, right, you either look this as an A, B, C, but then it's a very short zigzag. It is very short in time and price compared to your W and your X. So that's not something I'm looking for. However, the problem is a double zigzag is not allowed. So if this is an ABC, correction ABC, then you're not allowed to have that in a wave Y. WXY in a wave Y, that's not allowed. So in a zigzag, if wave Y wants to be a zigzag, then this is a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So you need a bigger 5-wave structure, then a correction, and then another 5-wave structure. Finish Y, then look for a move towards the upside again. So this is then your 1, 2 continuation. Now this, if this is your 1 on the lower time frame, and we'll zoom in a second, but if this is your 1 here, right, your 2 is quite long in time compared to your 1. This is your 1, this is your 2. Happens, yes. Probabilities wise, it's not great to see a wave 2 that is so long compared to your like 2 candle, 1 candle on the 1 hour time frame, wave 1, right? A very long potential wave 2 increases probabilities it is a wave B instead of a wave 2. So that's something we have to keep in mind. Now, a triangle at the moment, a triangle needs to start with a zigzag. So the same here. Like these two scenarios start the same way. You have a zigzag in wave Y, which should be a bigger one, or a zigzag in a triangle, which then has to be like, you know, preferably it does go down a little bit deeper to at least a 0.618, which I'll show in a second, so that you have an A, B, C, D, E, and wave Y target, the minimum is the 0.618, which you take from the high of W to the end of W to the high of your wave X, toggle on the wave Y targets, and then this is your 0.618. So that would be a minimum level you want to see hit. Wave Y zigzag, like the first zigzag of a triangle, preferably then hits this level at least, for then a bounce and a continuation of the triangle and then continue up, right? But preferably you retrace whatever scenario to at least a 0.618. So that's something to keep in mind. And then finally we have the flat, and I think the flat is incredibly interesting because with the flat you are faking people on both sides, and you know that's why I generally really enjoy flats. Let me actually move this to the downside so it's not, when I do analysis and draw, move some of the setups to the downside that I planned there. So, and then what we're looking for is this structure to be a wave A. Then we're looking for a wave B, and then a C to the downside. So you get another flat in a wave Y. The reason I think it's interesting is, first of all, without the targets. First things first, people here potentially think we go up because we have a 5-wave move. They look at this being a retracement and they think potential wave 3. So they are here observing this area as resistance. Resistance, resistance, resistance. And this is the moment where, especially if you close a higher time frame candle here, like a daily or whatever, they'll be like, okay, off we go. Instead, we move down. The breakout traders are being stopped out, right? People that are long and move their stop losses to the upside get stopped, hopefully in profit. But then you get a move to the downside. Second reason is that a wave C in a flat, the final move, tends to be very quick, high volume, quick move, which makes people scared because they'll be like, shit, the high is in. We're going to go for much lower prices, the beginning of a bigger correction, as a wave C tends to characteristically be short, fast, high volume, you know, make people scared and be like, oh shit, down we go, right? I mean, look at what we had, for example, over here, no? Look at the volume as, oops, like this. Look, volume increasing, price moving down, right? Look at here, quick move down as well, right? So we wanna see like a quick move, high volume to the downside. People get scared, and especially if we start breaking some of these lows, which would be very interesting at 35.5k, we could grab some liquidity. Possibly people are thinking, okay, well, you know, we put in another high, we're moving impulsively to the downside, we're breaking lows, we're breaking support. Oh shit, we're going down, no? But then this is your wave C, and then you're going to be looking for a return to the upside. And what it does, it's a typical psychology scenario, as I like to call them, where you bait the longers into buying, you bait the shorters into shorting, like breakout longs, breakout shorts, and then you get your actual move to the upside, where now the people that were longing here might be scared to enter here or here because of the quickness, the fast pace of this move and the high volume of this move. So psychology wise, they might be like, yeah, we're going further down. So possibly during the retracement, they might be shorting or whatever, or they have to again buy the breakout here if they dare to, because they already got wrecked once before. Interesting from a psychology perspective. Second, why this is interesting, or third reason, is that wave B most commonly is a zigzag, 5-3-5, which means it's also an ABC. And in a zigzag, wave C can definitely have high volume, right? In a wave C. Same with this move here. Wave C to the downside, high volume. And that could signal a potential wave 3 for people that are looking bullish. So what you then have is some people look at the bullish scenario. They're looking here, which is still a scenario, but I cover it in a second in more detail. You have your wave 1 looking for 2, and then your wave 3 to the upside, right? Where this is your 1, 2, 1, 2, and then you want to see continuation in the bullish scenario. But instead, what you're getting is a zigzag to the upside, where you have a wave 1, wave 2, wave A, B, C, where wave C is high volume. It mimics a wave 3, right? But then it finds the resistance, rejects bearish CVD divergences, down we go. And then finally, this brings me at the target boxes, where preferably we first hit this support, clear this up, hit the resistance, clear that up, right? Where we do actually have a weekly naked point of control right above here. 39K. Very interesting, no? And then we move to the downside. This support is already cleared then, hopefully. Then we have support over here. We'll have to observe the reaction. But then we get to the lower edges of the range, where again we have a weekly naked point of control. And weekly naked point of controls are incredibly important. Support resistance areas. So you're hitting the one at the top, you look for the one at the bottom, and then you continue again. And just to show you like how important these are, or I mean, of course I don't have them on the chart, but I know this bounce here. Oh no, wait, I have to go to the 30. Oh yeah, I remember because I was in a trade here. This bounce hit the weekly naked point of control and an immediate launch to the upside. Like, it's very rare to not get a reaction, but the best example I have, which is the one I remember the best, was this one. We had a weekly naked point of control here. Remember my golden target box for the OGs over here. We had the order block, we had like a daily and whatever, like all sorts of stuff, weekly, I have no idea. But we also had the weekly naked point of control at the top of the target box. it got hit, off we go, right? Very, very important support resistance areas, as it shows the highest volume level inside a certain week. So that is why I think, just a couple of reasons why I think the flat is interesting, but we have to wait and see. Generally, currently, the probabilities for me are still higher for this bearish scenario compared to the bullish scenario, where we already have a finished ABCDE that has to be then a triangle if you want to finish over here, really. Then you're looking at this to be a wave 1, you're looking for a 2 and then a 3. Now you do have the same conclusion, meaning you're going to wait for a wave 2, which means a retracement. And a wave 2 common retracement is the 05 to the 786, which is between 37K and 36.2K. And a wave 2 can be a flat, zigzag, can be a WXY. The only thing it cannot be is a triangle. So in this wave 2, we're preferably also looking for a bit of a retracement, which means that in both of the scenarios, we're looking for price to move down a little and preferably lose this target box and at least be looking for this one over here, right? Which is around the golden pocket as well, which is nice. Now the 382 is a less common target for a wave 2. It is a target nonetheless, which is in confluence with the box that we have here, right? Which we just hit as well. Jesus. 37.2K to 37.4K. As you can see, we hit the box. Nice little 0.4% bounce. No? Gotta love to see it. But in both of the scenarios, we're looking for a retracement, but currently the probabilities are still a bit higher based on what we see for the bearish scenario compared to the bullish scenario. Bearish scenario, again, it does not mean you do this, because that flat scenario is very interesting indeed. So that is what I wanted to say about the medium time frame, like or low time frame, like this range, basically. And if we then zoom in, we were looking for price to move to the downside, and finally it did. We had to wait a little, and it's perfect timing that it happens during the stream. The reason we were looking for the lows to be taken is because of this, as explained yesterday as well. Now this morning, I know I didn't make an update video, but also absolutely nothing changed when price was ranging over here this morning compared to the video I made yesterday, and it got late yesterday, so I was like, yeah, I'll sleep an hour extra. But we were looking for the lows to get taken, right? That was I think I still have the probabilities box here. Yes. So we were looking for the lows to get taken, right? And we were looking for the lows to get taken because of the bounce on the 886. The moment price moves up here, and you pull a fib from the low to the high and price comes back to the 886, it increases probabilities that any move to the upside is a wave C or a wave Y, which means that any bounce coming off the 886 has a higher probability of being a C or Y, which then means having a higher probability of going back down again to take the lows. Because a C or Y is a correction, right? It's a corrective structure to the upside, which means probabilities are then higher to come back down. Also, we didn't even hit it once, we hit it twice, 3 times. The moment you hit it for the second time, probabilities are higher for continuation. Now, we actually did have another bounce over here, but finally, probabilities played out, the lows got taken. What were we looking for? The lows to get taken. Very, very nice. Indeed, the lows now got taken. I don't know, maybe it's going to result in some swing failure pattern, who knows, but the probabilities have played out. The 886 is always a good thing to know, right? Always a good rule to keep in mind as well. Where did we wick into? We wicked into the target box very nicely, no? So, yes. Now, if price then moves to the upside, we do have resistance. What is this? Oh, this is the line. I like to keep that one on the chart and move this. So if price moves to the upside, we do have some resistance above price over here, which is the lines that you see over here, right? So first of all, this first white line is the top of this 15-minute gap. We have a gap over here, no? And we hit the gap once, rejected, hit it second time, rejected again. However, the moment you enter, or enter the gap a second time, as this is officially like your whole gap, the moment you enter it a second time, probabilities are high that eventually you're going to fill the gap. So if price comes up, I'd be looking for at least 38,053. We got to wait and see if that happens, of course. Then we have this target box, which is a 5-minute order block, which is the, I would say if price comes up, I would prefer to see price at least go to this white box, because it's also the golden pocket taken from this high to this low. So a little bit of confluence. Then this white line over here is the top of the 30-minute gap. The red line is the point of control of this little structure. Always interesting. And then this is a 15-minute order block. And that then gives you, so preferably the main area of resistance for me would be this area, with the key level being the point of control of this little bit over here. So yeah, that is an area that is interesting. If price comes to the upside, that's an area that I'm going to keep my eye on. No? And then observe the reaction, see what happens over here. And yeah, that's that really. So now that we finally took the lows, we can remove this 886 from the chart, because this has played out. Confluences in this target box: daily naked point of control, and the current weekly point of control. Now let me put these on the chart for you, so you actually have a level there. The daily and the point of control is at the same level. Arguably, people that use ATAS, arguably it's hit, but few dollars between the low here and the daily naked point of control. So I still have it on my chart. But at least we hit the weekly point of control. For the scalpers, of course, volume levels, always interesting, 0.5% bounce. Now, as a scalper, that's very nice. So, yeah, let's clean up the chart. Perfect. And yeah, a little bit of weekend volatility. So, locally now, though, as we took the low, can remove that. We have a potential flat. So, oh yeah, I remember what I wanted to say. If this is your A, this is your B, and this would be a C wave to the downside, look at the target for a wave C. Look where it is. I have to adjust it 1 second. The target area you see now is if price would move to the red line at the top, right? 38.2. If price does this and then comes down in a C wave, this is your target. Confluence between the 1-to-1 and the target box, where we still have the daily down here and the daily naked point of control. The problem I have with this being a wave C is if I move it down to the high of the range, this high here. So now I take the trend-based fib from the high to the low to this high. I could also take this one, but it doesn't change the point I'm making. The point I then make is now your target area for a wave C, the most common target area, the 1-to-1 to the 1.236, is down here. This wick, or even a wick to the lower edge of the target box, it's not gonna enter the common target area for C. So this being a potential A, B, and this being a C, if price does not come down here, it has a low probability of being a wave C. But also here, we don't have much support except for this low. So I'd be looking for this one, but that's of course quite a stretch at the moment. We first have to pass this support as well. So if price now moves to the upside here, right, it can be interesting to look for a flat in a wave B, because the longer like this range continues, the higher the probability it is a B instead of a 2, because a wave 2 commonly, generally, Elliott wave wise, tends to be relatively short. If this is your first structure down, and this would be your B, of course, or potentially even this, it's a very long B, right? Even for an A, B, C, it's a very long B. So either we want to see a wave C now moving to the downside. I'd be probably looking for the lower target box preferably, or this low to be taken. if we lose this box, first area of interest is the low, second area of interest is this box here. And if price wants to move to the upside, which I think can be interesting, then I'd be looking for resistance here and then AC to the downside, where this is just a flat A, B, C. Move to the upside, reject, move down. And if price moves to the upside, then the target area of C is going to be in confluence with the blue box, where we then still have some more support, which is the daily naked point of control as I've just shown you, and the daily. And then we could have an ABC for a flat. Then you have your A, B, C, right, which is your A. Then you could be looking, depends how long this C is, of course, but either ended here or ended lower. After your A, go up for your B, and then go down for C. And then eventually back up again for a wave 5, because you finish your wave 4. So, yeah. Those are my current thoughts. So, preferred, or I suppose higher probability scenario at the moment would be, I mean, we bounced here, so higher probability, what I would like to see is a 3-wave, like a flat here, and then a rejection, move down, go to this target box, and if we lose it, look lower, finish C, create a flat ABC on the low time frame, like higher time frame, the 1 hour. So yeah, and if we lose this target box here, then I'd preferably be looking at this, like A, B, C is already in, 1, 2, we're looking for 3 to the downside, and then we have to wait for eventually a range in 4 and then a 5, which means this now of course becomes a wave 3. Lose the target box, preferably, and if we lose that target box, I'd be looking for here or here. But if this would be a wave 3, we still have to wait for a 4 and then a 5. So yeah, it's important support resistance now for the scenarios that we have. This is already, that's the only thing that goes against going to the upside in B, preferably B or 2, but starts to become more B, is it's already very long. If this is your A, it's a very long B already, which is also the main reason why I am interested in a short here, but I want to observe the reaction because of potential continuation, just in case. But for continuation, price first has to dip deeper. If we go up now, probabilities are higher to reject here. If we first go down and then come up, then there's the probabilities are turning in favor of potential continuation to the yellow box. That's the difference now, right? So over here, yeah, target box, area of interest, absolutely, right? Always takes a while anyway for my setups to form. But from an Elliott Wave point of view, if you now go up here, probabilities are high to reject here and move down again for an ABC. If we go down now first, then I'm less interested in this area here, because we could then have a potential finished ABC in a wave A and then go up for B. That's just my way of thinking at the moment. So yeah, Cartes is public YouTube. Yeah. So he's like, yo, only diamonds here? That would be 81 diamonds, my friend. Look at the viewership number. Oh, we're not living in that world. We're not there yet. So yeah, currently myself, I have no interest yet. I'm patient. I know my areas of interest, and I'm just, observing what price wants to do. Area of interest if price moves up, right? And if price then moves down, area of interest 1, area of interest 2, and here, now that we hit this area of interest, it's about observing the reaction. So what I often like to do is grab the CVD on the 3-minute, have a look. So, but it's too early. We just wicked down during the stream, which is amazing. It looks impulsive though, right? As it stands, we have a high volume move to the downside. So it's about being patient. And that's always something I say as well, is On this channel, if you're watching, we don't YOLO, we don't FOMO, and we don't catch knives, right? We have a plan, we have a strategy, preferably based on statistics, and then we trade the plan. Now, if based on order flow, or you had a support resistance level, if your plan is or was to enter along here, that's very nice. But if you don't have a plan in general, trading is very risky and it becomes difficult to be long-term profitable, right? So my plan, my main trading strategy, it will take hours after this low for me to enter a position because I need a lot more price action, right? I have a strategy that avoids me to catch knives. It will take hours before I enter a position after a new high or low is made. So that's why I prefer to observe the reaction. And if price moves to the upside, I'm interested to observe the reaction here, no? Which will be hours after that high has been made for potential continuation. So I want to observe what happens here. And yeah, if it's interesting, might be interested in a short. So let's see what happens. We now, at least the probabilities that we had for taking the lows played out very nicely. So that is done. The lows have been wicked. That was what we were looking for over here. And yeah, now I think, again, that flat scenario is very interesting as explained earlier. So for the people that just joined, if you want to know the highest probability scenario I have in this range at the moment, which as it stands is the bearish one, make sure to go to the beginning of this stream, as after the Formula 1 talk, I spoke about the Elliott Wave, Elliott Waves in this range. So now let's go over the diagonal. Second point I wanted to talk about, new diagonal rules, everyone. You may have seen it online as well. I last week noticed that rules have been changed. It's actually like, I think the most recent book was the 2017 edition. And I gotta say props to Trade Devils here. We got someone in the group as well, GZ, that sometimes posts chart. But I know their channel and I follow their channel as well. It's great analysis, so why not, you know? There's only a few that I follow on YouTube which are proper Elliott Wave channels. Others don't respect the rules, which I don't like to see. So Trade Devils, I like to keep an eye on what they do. They don't really go in the 15-minute, more like higher time frame, but they are very knowledgeable in what they do. And props to them. And I got also forwarded a video about them showing the difference. So what I will do is I will send the link of that video of their channel after I explain the diagonal, so that you can have a look and just have another piece of content that explains the new rules of a diagonal in just maybe a little bit of a different way. And also they have some nice graphics and pictures you might take screenshots of. So I will put that video in the chat when after I explained it. So what this is with the diagonals, right? So let me yeah, I keep that on the chart, but let's scroll down here. So let me make this white. Let's start with the contracting diagonal. We're gonna have one there, and we're gonna have another one here. Actually, let me a little bit more horizontal. I'm running out of space. What is the name of the channels? I'll make like I'll give like a list at the end of some channels that I follow. Okay, there we go. So old, new. Okay, the old Elliott Wave diagonal, the rules at least, because a diagonal remains a diagonal, right? But it's about a change in the rules. We had our wave 1, we have a wave 2, we have a wave 3 shorter than wave 1, we have a wave 4 entering price action of wave 1, then we have a wave 5 shorter than wave 3, and then we get a retracement to the downside. If we put the numbers on, we have a 1, 2, 3, 4, 5, and we have overlap between the high of 1 and the low of 4 over here. A little bit of text. Overlap. Can you read that? Left. Not too much better, but you know what I mean. There's overlap between 1 and 4, right? Okay. New. We have a wave 1. We have a wave 2. We have a wave 3. We have a wave 4. And we have a wave 5. And then a move down. I actually have to change my diagonal a little bit because you're going to get... I could have drawn it a little bit better. I need to get my art skills out here, right? My art skills were never best at school. So we have a 1, we have a 2, we have a 3, we have a 4, and we get a 5, and then we get a move down. Okay, that's better. It's very, like, I make it look very drastic, but just so you get the idea of the new rules. You might already see the differences. Before I actually go into detail, over here, this wave 3 is shorter than your wave 1. Take a trend-based fib from the low of 1 to the high of 1 to the low of 2. Toggle on the 1 to 1. That's your invalidation for wave 3. It is shorter. Your wave 5 is shorter than 3. From the low of 3 to the high of 3 to the low of 4. Your wave 5 is shorter than your wave 3. Right? Now you can already see the difference here. Let's see if I made my wave 1 too long. Oh no, I didn't. There we go. Before I explain it, I'm teasing. Putting it on the chart, but not yet explain. Okay. There we go. Put it in. Okay. Old diagonal versus the new diagonal, right? Old diagonal. Wave 3 has to be shorter than 1. Wave 5 has to be shorter than 3, which is normal. Wave 4 has to have overlap with wave 1. New diagonal. Wave 3 does not have to be shorter than wave 1. Wave 4 does not have to, like, you have differences between rules and guidelines. The rule where wave 3 has to be shorter than wave 1 disappeared, it's omitted. The rule where wave 4 has to cross price action of wave 1 is now becoming a guideline. It's not a rule anymore, which means it doesn't invalidate a diagonal if wave 4 does not have overlap with wave 1, right? A diagonal is not invalidated. In the past, if wave 3 was longer than 1, the diagonal is invalidated. In the past, if wave 4 did not cross the price action of wave 1, the diagonal was invalidated. So now the rules become more flexible. Wave 3 is allowed to be longer than 1. However, wave 5 has to remain shorter than wave 3. Wave 4 does not need to have overlap with wave 1. It went from a rule to a guideline. However, the rule that wave 4 has to be shorter than wave 2 remains. So, summarizing. Old, 3 shorter than 1. 5 shorter than 3, 4 overlap with wave 1, wave 4 shorter than wave 2. New rule. Wave 3 can be longer than wave 1. Wave 5 has to be shorter than wave 3. Wave 4 does not need overlap with wave 1, and wave 4 has to be shorter than wave 2. And this is the new diagonal. Now, if you want to give some love to trade devils. They have no idea that I do this, but I also don't need to tell people that I show their channel. Then make sure to check out this video, which is their channel. And I got forwarded their channel, so that's Trade Devils, and you can check them out as well if you like more Elliott Wave stuff. They are one of the very, very few that I do follow. So yeah, their Elliott Waves is cool. And yeah, check the video out. They like go in it in a little bit more like, I guess not more detail. It's the same, but they show it a bit differently with some pictures, and it comes from the book and that sort of stuff. So I like to show where I saw something about this. I like last week I heard about it, but then I got this video and I also watched it. So and I think it's relevant for you guys to know. Also, if you don't yet know Trade Devils, then at least you know now. Maybe you follow them, maybe you don't, but at least you know about the channel. And their Elliott Waves is cool. They don't really go into low time frames. They mainly stick on the higher time frames. And they do also like a lot of stuff with indicators, which I don't do. Like not necessarily RSI and MACD, but other stuff from their partner. They have a partner on the channel, and they use some stuff with that. And I am of course purely focused on Elliott Waves itself without indicators. But I like to also, you know, it's cool to look at other channels that respect the rules, because there's many channels out there that do not respect Elliott Wave rules, and I can't watch that. It's horrible, which is one of the reasons I made my channel. So yeah, old diagonal, new diagonal. Ta-da! Very nice. So let's go into a little bit of chatting before Formula 1 starts. I already saw 12 minutes. Adrian is on point. Luckily, I got F1 TV, so you know I can go back in time. But yeah, okay. Lando. 1 second. Go up. Where were we? From yo, I'm good, mate. Thanks for asking. So LJ is doing good. Adrian, same opinion. Yeah, there he is. Cheese, what's up, Cheese? How you doing? Yeah, so Elliott Wave International, the IP holder behind Elliott Waves, right? They are the ones that update the rules and update certain patterns and that sort of stuff. So always important to keep an eye on it. They're also the ones that bring out the book, the Elliott Wave Principle. This one. The game is started. Why change the rule after? Always innovating, always tracking statistics. That's what I do as well with my way of trading. I need Starlink. Some reason it's lagging. I actually lowered the quality. It went from 6.8K bitrate to now 2K bitrate. By the way, for everyone that just joined, make sure to go to the beginning of the stream beginning, like the first few minutes is Formula 1 talk, but that's where I analyze the whole range and also this micro, the price action we have over here. Now we're in the chatting section, and then we go into Formula 1 in a little bit. I got MBN. Okay. Everyone supports or whatever they do for themselves. So we're not in a political stream. Everyone, of course, does what he or she wants or can do. No one has to express or mention what they do. Laurie, flat patterns are like some sort of liquidity grab patterns. Yes, but mainly the expanding flat structures. Because with an expanding, so with a regular flat, right, you have the expanding flat, which is A, B, C. Grab the liquidity, fake out, people break out longing, you wreck everyone. Then you have the regular flat, right, where you have A, B, but wave B does not have to take the high of A, because your minimum target for a regular flat is the 0.9 fib. That's the minimum. And then you can have a C to the downside that still takes the low of A. Or you have a running flat, where preferably for a running flat, you do take the high of A, that is most common, and then you get a wave C, but wave C does not take the low of A. Wave B does not in a running flat have to take the high, but it still has to at least go higher than the 0.9 Fibonacci. Then you get a C down over here that doesn't take the low of A. So yeah, the expanding flat structure is definitely a liquidity grab type of structure. I suppose you can definitely say that, yeah. Bitcoin drop, yes, correct. A little bit of a move, but as expected, wick the lows, hit the target box as well that we had there. Up, very nice. This guy, what's up, Sean? How you doing? How you doing? Only diamond. Flotty, good afternoon, Flotty. What's your Flot? Yo, Flotty, what's your expectation? Did you reply on my comment or not? I haven't seen it. Let me check. Did you tell me your prediction for the race? Because I saw your comment. So I asked you what your prediction is. Where you at? Where's your comment? Oh no, wait. I only said final race day. Wait, I said it somewhere else maybe. Maybe in Discord? I don't know. Oh, I know where I did it. In Discord. Koen's content here. Let me know your predictions. There you go. What do you think? Avin Mouville, what's up? How are you doing? What is the name of? Yeah. So I'll get there. True. What's up, Dasagamer? What's up? How you doing? Looks like a normal impulse. I still like it. You know, I'm still looking at that flat as well. At the moment, we wick the lows, close the 15-minute candle above. Quite interesting price action indeed. Change the price like it's a drawing. Koens, can you look in the Diamond Lounge? 1 second here, because I don't know what. I have to scroll down. Koens doesn't seem on it. What do you mean, Card Crypto? Koens doesn't seem on it. He drawing live. Yeah, I was drawing. Oh, you mean with a potential setup? I mean, still takes a day. But yeah, older than 3 days is not allowed, guys. Right, older than 3 days. Yeah, I was drawing indeed. I need to up my I think my paint skills are pretty okay. My trading view paint skills, no? Even harder to recognize, just my opinion, yeah. Like, so generally, I think diagonals are still gonna follow the rules as they are, like most, or the old rules. I think the most diagonals will still follow the older contracting diagonal structure, but it's just that in case these are the new rules, and it is now allowed that wave 3 is longer than 1 and no overlap between 4 and 1. Makes them more difficult to recognize, especially for pattern traders. It becomes even more difficult to trade the pattern, because you can now also have an extended fifth, where your wave 3 is a little bit longer than 1, no overlap between 1 and 4, so you could be looking for an extended fifth impulse. So 1, 2, 3, 4, big 5. So then you have an impulse instead of a diagonal. So yeah, they're a little bit more difficult to recognize. Absolutely. Is this a common pattern? More common on lower time frames than higher time frames. Diagonals, that is. Impulse and a diagonal. Yeah. Yeah, well, I mean, not really, because wave 3, right? Like if your wave 3 goes all the way here, and then you get a 4 and a 5, it's all about proportion, right? Wave 3 is allowed to be longer, but once you hit the 1.618 trend-based fib extension, let me put this on. Probabilities are higher for a wave 3, 4, 5, an impulse instead of a diagonal, right? So it's not that difficult, but the main thing is you could have an extended fifth. If your wave 3 does not go to the 1.618, you could have an extended fifth in there as an impulse. What's up, Daba? How you doing? 50x Bitcoin long stopped out 37,250. Wait, how did you get stopped out at 37,250? That's a big wick compared to where price stopped on my chart. Sorry for your loss though, but that's an interesting wick. Bybit, maybe? Bybit always with the wicks. When you are in a position due to bullish CVD and then bearish ones arise, well, my strategy is not like, oh, there's bullish CVD, so I enter, or there's bearish CVD, so I enter, right? It's not that CVD is what I trade, right? It's the context and other things that I use besides that will decide. However, when one trades CVD, the first CVD that appears has the highest probability of playing out. So yeah, but what the thing is once, for example, once you get a move up and then a retracement and you get bullish CVD, and then price moves up, then you get bearish CVD. That can happen, that's no problem. But once price starts to do this, go down again and then go up, create more bearish CVD, go down again, a little bit up and more bearish CVD, that is when the bearish CVDs are really starting to counter the bullish one, and the bearish CVD gets more probabilities. But the first move up, like if you move up bullish CVD and now you start to see bearish CVD, the bullish one has priority. Only when you then start to continue the range and you get more bearish, that is when bearish CVDs start to take over in probabilities. How long can you maintain a margin position? I don't know. I mean, if you're trading, I think as long as you want, no? If you're just trading on any known crypto platform, there's no time limit. You can be in a 1x short the rest of your life, as long as the platform is there. Yeah, so you can be in any position. How big leverage you use most often? If you use leverage, of course, depends on my position size. I use 1x, 1% risk. But if my stop loss is 0.5%, I need to 2x my risk to get 1%, or 2x leverage to have 1% risk, right? So if you have, where's the tool? If you have a long and you're going to have a 1% stop loss, right? Now, if your account is 100K, then you will, wait, let me actually do this. If your account is a 100K account, you can now, with 1% risk, if you want to risk 1% of your account equals 1K, you enter the position now with 100K. That's your position, right? Simple. If you want, or if your stop loss with your particular strategy at a certain moment, your stop loss becomes 0.5, right? Or whatever. And you want to still risk 1% of your portfolio, you now need to use 2x leverage to risk 1% of your portfolio, because your stop loss is halved. If your stop loss is going to be 0.25, just using the easy numbers here, now I would need 4x leverage to risk 1% of my portfolio. So leverage is based on my risk. It's not based on the amount of profit. It's based on risk. If my stop loss is 2% away and I want to risk 1% of my portfolio, I can only enter with 50K, right? Because I'll be losing 1K if my stop loss gets hit. So it's based on the amount of risk. And the risk for me is most often 1% or less. But most often, by far most often, 1%, yeah. Solana behaving differently from Bitcoin. Yeah, the altcoins had their moments during from 15K to where we are now. The altcoins had some very interesting moves to the upside. Absolutely. Solana just flying all the time. Do you chart Bitcoin dominance? Actually, not really. I only usually focus on Bitcoin itself. I would only chart, for example, Bitcoin dominance or Pistachio like what was it, the trader 1 and 2 charts or something? What was it? Only whenever we have time and jump into those type of charts. As usually I stick with Bitcoin, as that is what I trade. Justin Chu, what's up? How you doing, man? Thanks for changing your name in Discord, helps me out. Sultan +1 like, thanks for the like, mate. Pistachio, welcome as well, newest diamond member. How you doing? Already, by the way, Pistachio is one of the first ever members on the channel 5 months ago. Has been gold for ages. And now cooking in diamond. What's up? My comment was about the new guidelines. Yes, I understand. Which is what I explained here just now, where it's not too difficult to know if it's an impulse or you're looking at this diagonal, because if the moment you hit the 1.618 trend-based sub-extension, probabilities increase for 1, 2, 3, 4, 5 impulse instead of a diagonal. But if wave 3 crosses the 1-to-1 line but not reaches the 1.618 and you get a 4 and a 5, we have to think about a potential extended 5, but an extended 5th wave in an impulse is quite rare. So I think still the 5 diagonal probabilities wise, extended wave 5 in an impulse versus a diagonal wave 5, I think I would give more probabilities based on occurrence for the diagonal compared to the extended wave 5. Extended wave 5 is not too common, but it's about observing the reaction, right? It comes more down to observing the reaction at that moment in time. Yeah. Of course, if you are in a impulse 1, 2, 3, right, wave 3 and then 4 and an extended 5th, you really want to see a big push with high volume, and you're just going to crash to the upside, because in here you're going to have a 1, 2 boom up. So there's no great resistance, no great signs of weakness, where in this scenario we want a zigzag to the upside and then 5 in and then a move down. But yeah, I get the question. Okay, Formula 1 started. I know I have to go. We'll be delayed slightly. Enjoy the race. Thanks, everyone. Let's see how it goes. Robert Preacher's macro count. Yeah. I still have to maybe like in another live stream go over this, because it's kind of like time for me to move now. All I can say is like the 886 has been hit on the S&P. So I don't yet see weakness that would signal the end of a very big 5 or 5 or 5. So yeah, not sure if I yet agree. I understand where he comes from, but you know, common targets for a wave 2 would be the 05786. We hit the 886 I think twice now on the S&P. But let's go into that video the next stream. I guess I can do another stream soon again, and then we can go over that video and some of the charts that he showed as well. Okay. So in the video we did Bitcoin. For the ones that just joined, go to the beginning, because that's where I did the analysis of, you know, what we're looking for locally as well as in this whole range for the past, I don't know, week. How long have we been in here? A few weeks now. So you can check that one out. We also went over the new rules of the new diagonal, right? And we did chatting as well. So yeah, that being said, time to watch Formula 1. So enjoy your Sunday. Have a great time. Tonight, 7 p.m. Central European time, I'm going to come back with the macro, or well, cycle, macro, and high time frame Elliott Wave scenarios. Yeah, enjoy your Sunday. I'll see you later.